Hi, Abhimanyu. Thanks for joining us. See, Abhimanyu, in the last 1.5 months, the account openings have increased. There are numbers showing that there are more people opening Demat accounts. What could be the reason?
So thanks a lot, Saurabh. I think so. The reason why we are seeing a significant increase is from retail investors and especially, younger generation next and they getting into the stock market is clearly twofold. One is that, people are sitting at home and, with advent of technology and with the ease at which, now you can open an account and the kind of thrill that some of the investors get by investing into markets, we are seeing a significant increase in traction. The other reason, obviously, is that because the market has gone down, so a lot of investors feel that, since the market has corrected and the other asset classes returns are less, for that particular reason, we are seeing that some of the seasoned investors from other asset classes are also moving into equities.
Okay. So at this stage, is it all very rosy for everybody to invest, or they should be very cautious even if the market has fallen significantly? What kind of approach they should have now?
So, see, my experience is that there is always a fees that you have to pay in the market to understand, how the market behaves.
Right.
So when new investors try to, navigate through the way the equity market works, there obviously would be some risk in terms of they, losing money. So from that perspective, I think so these investors need to be a bit cautious. I would still advise them to go for long-term investing.
Right.
If they are doing trading, which I'm sure a lot of them are doing, and especially intraday trading, I would request to them to ensure that they have a very low leverage.
Right.
What very low leverage means that, whatever money you put in, don't take extra limits when you're doing the transactions.
Right.
Because in case the market movement is the other way, they might lose more money.
And any specific advice for the millennials, the first time young investors?
So, as I said, they have to learn how the market works. There's no harm in losing some money in the market and gaining some money. Both these things are quite okay for any investors.
Right.
I would tell them that, please ensure that you have discipline when you are investing. For example, if you are doing trading, so ensure that you have a stop loss always when you're doing trading. When you're doing futures and options, then be very careful because these are leverage positions. Especially when you're selling options, then your losses could be quite unlimited. So make sure that, whatever investment you do, it happens in a way that you are always covered in terms of an ability to pay money. And these are actually historic times that we have gone through. Case in point is what has happened with in case of crude oil, where we've seen that, certain contracts were traded at even a negative value, which is something that no one had seen earlier in the market.
Right. So, since everybody is flocking to equity because they do not understand, or maybe a little bit of gold, at this stage, how the asset allocation strategy holds true? Or, how would you advise people to allocate their assets at this stage?
So I think the broader asset allocation strategy is based on the risk profile of the person and his risk tolerance and risk affinity towards a particular asset class.
Right.
But obviously from a tactical perspective, since equity markets have come down and also the fact that on the debt side, yields are lower now, I think so it would make sense for people to increase their weightage in equities. Considering the fact that the government has not come up with a package right now, which is very big, there's a bit of risk in terms of overall market levels. And from that perspective, what we have been recommending investors is that do their buying in more of a staggered manner. That would be something which would be more logical for investors to do at this particular point of time.
Okay. And since the markets are extremely volatile, should people be looking at a larger horizon at this stage, or as you said, they have to be really cautious and invest in a staggered manner and exit also in a staggered manner, or they should look for a longer horizon even while investing?
So see, the beauty of the market is for different players, you have different kind of strategies. Like, for example, if you're a newbie and you want to play on the volatility of the market, then what you can do is you can buy a call and put option. If you're looking at if you feel that the market will remain here only, then you can sell both call and put option. So you can do a short straddle strategy. So there are different kind of strategies that you can adopt in the market, to play the volatility.
Right.
With regard to trading, I think so it is something which is very specific to which particular stock you're doing, as well as the index that you are focusing on. But right now, the way things are, I would say that it is more of the defensive sector where one should be investing more money relative to the aggressive sectors.
Okay. Any say, as you're saying, defensive sectors, could you elaborate a little more, and also maybe some stock advice you can give?
So I think so in terms of stocks, we are very bullish on companies like Bharti Airtel. We are very bullish on companies from a pharmaceutical side, something like Cadila, which is doing some amount of work on the COVID side as well.
Right.
We are liking some of the mid-cap companies like Deepak Nitrite. We also like insurance companies because a lot of people today want to buy an insurance. So something like an SBI Life also looks pretty interesting to us. So these are some of the stocks that we are right now bullish on, and investors can for sure, invest in these companies at this particular point of time.
Okay. Thank you, Abhimanyu. I think you mentioned about certain strategies. Probably we can talk about them in our next podcast.
Sure. Thanks a lot.
Thank you. Thank you.
Bye.
Bye.